Hello, you are welcome again. From our previous topic, we have done these two categories. We are going to finalize this day trading strategy, this SMC with AMD Confluence. The strategy, we are going to finalize it today using this number 6 and number 7, rules and risk management. That is what we are going to consider for today. Talking about the rules, we want everything to be mechanical, like you don't have to stress yourself. You see the trade, you take it, you already know what you are doing. That is why you are trying to build up the rules to apply with the risk management involved. Now, the first thing first is always check fundamentals or news of the day on Forest Factory before making trade decisions. Okay, what do I mean by that? On Forest Factory, this is the website. You just go on your browser, any of your browser, type Forest Factory, Google it, okay? Then it will pop out like this. It will show forestfactory.com. Click on it. So when it pop out, it's going to show you something like this. What you have to do next is this. Click on this filter icon there. Click on it because I want to select only the important news that is necessary. So you have to unmark this one, unmark this, and leave only this red one. That is the most important news that can have any effect on the market directly with our trading pattern. Okay, so after you have done that, you have to just click on apply filter. Then when you click on apply filter, you see that any important news for the day, it will show you. Today is what? June 19, that's on Wednesday. Okay, June Wednesday. You can see that the important news that will be coming up is 11:45 p.m. That's for NZD pairs. Any pair that have NZD in it, this news may affect it. So that is it. Now, when you have checked the news for the day, if there's any news like NFP, CPI, all those high impact news, maybe you see them on USD, USD pairs, you now see them on this Forest Factory that you have just checked. If that is the case, you have to avoid trading before then. Okay, so avoid trading before or during high impact news like NFP. Now, number 2 thing you have to do is trade if trade opportunity comes before the news and has high probability of playing out before the news, you may take it. What I'm saying is our trading strategy here is for what? London and New York session, right? So, and London session starts in the morning and New York session starts in the afternoon according to my Nigeria time here. But there are sometimes opportunity might present itself even if there's news. After checking Forest Factory, you now see that there's news. Most NFP news or CPI news usually happen around 1:30 p.m. That's in the afternoon. So there may be some opportunity that may come up, some trade opportunity. As if you are using 15 minutes time frame, if trade opportunity comes during the London session and you see there's high probability that that trade will play out before New York session, because New York session, that is when those type of news usually come. You can take those type of trade. Okay, now most recommended to trade after high impact news if there is anyone for the day. Now, if you see any opportunity to trade and there's that opportunity comes during New York session, okay, and there's news by 1:30, what you have to do is to wait after that news by 1:30 or 2 p.m. Just wait after the time of the news, then you can go back to the market and trade. But if you want to trade any trade before the news, it is very dangerous because the news can just invalidate any of the trade you are taking. Those are high risk trade. It is not recommended. If you want to take any trade at all, wait after the news, then you can take it. Just like I'll be saying, you see, place trades only during New York, London, and New York session. Do not place trade in Asia and after New York sessions. Like our Nigerian timing, our time of placing trade should be 8 o'clock in the morning. Okay, then we can also take another trade, or we can take trade during this 8 o'clock in the morning is London session, okay, until 12 p.m. After 12 p.m., now by 1 p.m. will now be what? We'll be entering New York. This is London session. By 1 p.m., we'll now be entering what? New York session. So 1 p.m. to 5 p.m., that is for London's New York session. 1 to 5, that is for London session. Then for New York session, sorry. Then London session is 8 to 12 p.m. 8 in the morning to 12 p.m. So those are the time we have to take trade. Once time is now 5 p.m. in Nigeria time, that's after this New York session, it's not recommended to trade even if there's any opportunity, because there's high probability that this our entry model will not work. It will just invalidate. We have to stick with the rules, okay? Ensure your market structure is correct and enter only at order block or liquidity as previously explained. We have talked about our entry models in previous videos. If you have not watched it, you can watch it again to understand it more better. Now you have to stick to only the 15 minutes time frame for the market structure and everything. You just have to stick with one. You don't have to be going from 15 minutes, 1 minute, 5 minutes, 4 hour, 1 hour. All of those things, they can be confusing. Stick with the 15 minutes time frame. Wait for price to get to your entry point, and then you can trade accordingly. Now, execute trades without fear or doubts once entry criteria are available. Once this is Asian session, right? This is London and this is New York. If you see any trading opportunity during New York and during London and New York session, you have to take it. Do not entertain any fear at all. Now, trade like a robot. When a robot sees a signal and everything that has been programmed for it to do, it will just take it and do it without thinking twice. That is the best way to trade, because we have put our risk management and parameters, everything in place, that if we lose this trade, there's another opportunity for us to win even more trades. Those things can boost your confidence. Now, you can also use limit order or market execution. When you go to MT4 or MT5, you can see market execution like, market execution mostly after 15 minutes candle that taps into entry zone. Maybe when you want to trade, you can see that this is price coming in probably during New York session. New York session, that is when order block is mostly respected a lot. Now, when price is coming to New York session and you see that the first 15 minutes candlestick tap into your order block, for example, after taking that inducement, this high point is confirmed. What do you do next is what? You have to wait for that 15 minutes candlestick to close. After price has closed 15 minutes time frame, you can now do what? Place your entry and then try to buy with the trend. With that, you are going to minimize your losses. Why? Because there are sometimes price will just come into that 15 minutes time frame candlestick, and then before you see this first candlestick that will tap into it, we just invalidate it. When that happens, you know that this structure is no longer valuable for your entry. You have to look for another entry. Okay, now we are going to talk about number 7, risk management. Less pairs the better. What do I mean by this? In the forex market there are about 28 pairs. Now by the time you add those US 30, NAS 100 and gold, all those things, there are about 30 or 31 of those. Okay, so if you are using this strategy and you are trying to move from one pair to about 31 pairs within London and New York session, it might be confusing, require a lot of work, and then more losses. Okay, that can happen. So there are some people also, they stick with only one pair, that they just want to trade only Euro USD, Euro card, all of those. Some people only trade gold. Okay, it depends on every individual. But if you are a beginner or you are just starting up and you are trying to get your things to your trading aspect together, I can suggest for you to do what? First of all, it is recommended to trade only the major pairs There are 7 major pairs. We have Euro USD, GBP USD, then we have NZD USD, odd USD, USD CAR, USD chef, USD JPY, just like that, 7 pairs like that. But if you are just starting up, I can recommend 12 pairs for you to trade, okay, when you are trading forex. Okay, let me show you the 12 pairs. As you can see, these are the 12 pairs I can recommend for you to trade: Euro USD, GBP USD, NZD USD, odd USD, USD CAD, USD chef, USD JPY, GBP JPY, Euro JPY, US 30, NAS 100, and gold. And you can see that the broker I usually use for all of this is Oanda, because to me Oanda provides more more better price action with the candlestick. The candlestick, they are okay with this strategy. But because if you use FS or any of those other candle or any of those other broker, you may have issues with reading the chart correctly. But with Oanda, at least for now, is providing very good price action with the candlestick. Okay, so those are the 12 I can recommend when you are trading forex. Then if you want to trade volatility, that's synthetic indices, I can recommend also about 13 of them. Let me check it. Okay, if you are trading volatility, these are the volatility I can recommend. You see, we have step index, volatility 10, volatility 10 IS, V25, V25 IS, V50, V50 IS, V75, V75 IS, V100, V100 IS, V150 IS, V250 IS, J10, that's jump index, okay? Jump 25, jump 20, jump 50, jump 75, and jump 100. All these you can also trade them using this strategy. Although I will recommend this strategy using it only on forex trading. Why? Because forex trading, the price action and all the opportunities that happen during London and New York session, they are very precise and good, can give very good return in profit compared to any other type of market. Okay, now coming back to this risk management, there are other things you have to do for beginners or for more clarity. You see, use Fibonacci retracement tool to trade. I do not go for buy or sell above or below 50% fib levels, respectively. What I mean is this: there are sometimes, we know that this is a bullish market, right? And then we know that this is price taking inducement, break of structure, inducement again. What do we expect here? This is what? Other block. One price to come to the other block. And then there are sometimes your other block or the fib, your other block or inducement, when price take inducement and give an entry here, there are sometimes by the time you do your measurement with this fib retracement tool from this low point to this high point, you can see that this is first of all the 50% range. There are some people, they will say, okay, this point is premium and here is discount, and you have to buy from the discount. So anything below 50%, when price come and take out this inducement, now you see, when price come and take out this inducement, and we know that this line here is 50% line, meaning that it's already in the discount zone, meaning you can buy it here. If price give an entry here using maybe liquidity, you now give us single kind of that block, all those things, we can confidently buy it. Then if price also come to the other block, we can also buy it accordingly. But there are some times when you see the inducement may just be up above the 50%, and then when price come and take the inducement at above the 50%, you buying here, it can also play out, but it might be risky. Okay, so that is why I say for beginners or for more clarity, you can also use this Fibonacci retracement tool. You just have to plot it, 50% line. When price come below the 50% line, buy an opportunity that is here. That's for when market is bullish. Okay, you can buy. Then If market is bearish, the same principle that you want price to just retrace, you take your Fibonacci through from the up there down to the top. Then by the time you look at where the inducement is, the inducement point is above this 50%, meaning that since it's above it, we can sell here if there's any selling opportunity. Then if price also come to the other block, we can also sell here accordingly. But if the inducement is above, it's below this 50% retracement tool of Fibonacci tool, what do we have to do? We should not take such trade. Although you can take it, but it may be risky, it may give less probability of winning. That is why the Fibonacci tool is highly suggested or recommended. Okay, now coming to the final aspect of this rules and risk management, number 3 is do not take more than 3 trades per day, meaning that you should not over trade. That is why when you are looking at the 12 pairs, like I recommended, when you are trading forex, when you are looking at the 12 pairs, after marking out your market structure, and then you are waiting for price to take inducement if there's opportunity to take, or price to come to the other block probably during a New York session. When price take inducement and there's an opportunity to trade, that mostly happens during London session. But if there's no opportunity at inducement point, then at other block there's maybe an opportunity which can happen also during New York session. Okay, so you should not take more than 3 trades per day from these 12 pairs. As time goes on, you may be reducing the pairs. Sometimes you may even be taking 3 pairs, like maybe Euro USD, USD JPY, and probably gold. But for now, for you to understand it very well, you should be going through the 12 pairs, from London session to New York session, and then you find your trade. Number 4 on this aspect is this. Number 4, take trade opportunities that has minimum or not less than, that's what I'm trying to say, or not less than 1 to 3, or preferably 1 to 5 risks to reward. When you bring out your if you are buying, when you bring out your tool, your measurement tool, you can see that from this trade you should take any opportunity that is at least between that 1 to 3, meaning that if you are risking $1, you are going to be getting $3. Okay, then sometimes those type of trade you can also see 1 to 5 trade. What does that mean? That yes, you are risking $1 to get what? $5, so and so forth. But when you see any trade that is below 1 to 3, now giving you 1 to 2, all of those, with this strategy it is not recommended, because your risk to reward will be calculated as an overall to determine your profit at the end of each week of trading, or at the end of each month. Now number 5 here is what? Risk percentage per trade. Now I've shown here that for personal account you can risk 1 to 10% of your personal capital. Maybe you have $100, you can risk 1% of $100 is $1. So if you want to risk 10% of $100 is what? $10. But if it's not your personal account and it's ProFirm account, what do you do? For ProFirm account, maybe you have $1,000, or let's say $10,000 as the capital. Okay, for ProFirm, you can see that from 0% of 0% of $10,000 for ProFirm, what does that give you? It will give us about $100. Okay, then 1% of this will give us what? $1,000. So it's up to you to do your calculations and know which one is comfortable for you to go with. Then number 6 is what? Keep your emotions on check. I've measured this during the rules, but you have to keep your emotions on check. It's very, very important. That's when you talk about trading psychology, all of those. Sometimes you might lose 5 trade or 2 or 6 trade, but you know that by the time before you go 10 trade, in as much you are following these rules, before you go from 1 to 10 trade, at least you can win 3. The least you can win is just 3 trade, in as much you are following the rules. If you win 3 trade and you are risking 1 to 5, you can see that 5 times 3 is what? Is 15. and you have lost about 7 trades before. So by the time you remove 7 from 15, what do we have? We still have about 5 trade or thereabout, right? You still have about 8 trade, because 15 minus 7, what do we have? We have 3 plus 5, that is 5 plus 3. We now have what? 8. You still have 8% after taking 10 trade. After taking 10 trade, if you lose 7 trade, you still have 8% from each of those trades. In as much you are consistent with your risk to reward, and then the percentage you are risking, if you are using 1%, just be using 1% throughout the 10 trade, okay? That is what is going to tell you about. So with having those in mind, it will help you to keep your emotions on check. Then finally, the baba of them all is what? Keep your journal, which is journal your trades. You can journal your trade. Like any trade you take a screenshot. Take screenshot of those trade that you take. Then that's the chart. Take screenshot of the chart. Then save them up. You can save them on your Telegram or using Discord. Just dedicate a particular channel or group to it, that okay, this is my trade, this is the trade I took today, so day, this is how I played out, this is the outcome. All those things you have to keep it there. So I can do some video explaining more about this risk percentage you can take, and also journaling your trade for more explanations and clarity. But these are just the things you have to know in as much you want to trade. You want to do day trading using this SMC with AMD Confluence. I wish you the best. Watch the videos over and over again. Practice what you have watched, and I know very well that in the long run you will be very profitable. Have a great time.